So, hello guys, welcome back. In the previous video, we have discussed the introduction part regarding the depreciation topic, and also we have seen our first method, which is straight line method. Okay, I hope you have understood the problem, the first illustration number one, which has been seen on straight line method. And now in this second lecture, we are going to see another problem regarding the second method, which is written down value, or WDV, or a diminishing balance method, or reducing balance method. I write the abbreviations here: written down value, or diminishing balance, or reducing balance method. Okay, written down value method, diminishing balance method, or reducing balance method, all are same. Okay, all are same here. So if any of the things comes in the examination, there is no need of any confusion. So written down value, this is. And what is the usage of this written down value? Whether this is a very important method of depreciation, most probably or most frequently only reducing balance method. I mean, written down value method will be tested in the examination, most probably. Okay, if not, we can say the straight line method, or that is SLM method. So now we shall see how depreciation is charged on the machinery, or we can say on the tangible fixed assets which we have seen. Okay, let us compare. Before discussing about written down value method, let us get some small recap about straight line method actually, because it is somewhat relevant to straight line method only. If we have purchased an asset for 10 lakh rupees and we are using it for the whole period of rupee for 10 years, then it will be utilized. The value of the machinery will be evenly distributed among 10 years for 1 lakh rupees each year. So for 1 lakh rupees, the amount of depreciation will be evenly distributed, and amount of depreciation will be charged to profit and loss account evenly. But here the authors says that straight line method is somewhat wrong. So instead they have created this written down value method. That means what? The depreciation will be charged on the written down value of the machinery itself, what it is. For first year, the depreciation will be same for straight line method and WDV method, but the value of depreciation will be changing from the second year onwards. From the second year onwards, the value will be changing. Here in straight line method, I have already informed you that if we want to identify the question is of straight line method, then in question depreciation at the rate 10% on original cost. This will be mentioned, but of course the rate may be different, but on original cost will be mentioned here. On original cost, if it is mentioned, then we can assume it is straight line method. But if straight line on original cost is not mentioned, and they will be mentioning here in WDV, depreciation will at the rate 10% on reducing balance, or written down value, they are going to mention in this manner. Then we are going to see the depreciation amount. We are going to charge depreciation on the reducing balance here. So let us see. If we are going to charge the depreciation according to straight line method, 10 lakhs is the amount of amount of asset, and if we are charging depreciation at the 10% for year 1, what will be the value of machinery? Depreciation on machinery will be 1 lakh rupees, and for year 2 it will be same, because the depreciation will be charged on the cost for year 3, and up to so on up to year 10 the amount will be same for 1 lakh rupees only. So that 1 lakh rupees is 10 lakh rupees is even distributed towards 10 years as 1 lakh rupee each year, 1 lakh rupees each year. But in this case in WDV it will not be the same, but for first year, that is for year 1, that will be charged on the asset value, the original cost only. 10 lakhs into 10% only it will be charged. So for the year 1 that would be 1 lakh rupees only. But what is the value of the asset remaining at the beginning of the year 2? 10 lakhs minus 1 lakh, which is 9 lakhs. So on this amount we are going to charge the depreciation, which is 10%, which is 90,000. It's, I hope you have understood. On the reducing balance, reducing we are reducing this 1 lakh from the original balance of 10 lakh. So this is reduced balance of the original cost of the asset, on which we are going to charge the depreciation at the 10%, which is 90,000. So what would be the value of depreciation in year 3? 90,000 is reducing balance of year 1. Okay, at the beginning of year 2, in sense for the year 1, what is the reducing value? 9 lakh rupees. So what is the value for year 2, reducing balance for year 2 and or year 3 beginning? 90,000. 90 lakh, 9 lakhs minus 90,000, which is 8 lakhs 10,000, and on which we are going to charge 10%, which is 81,000. In this manner the value of depreciation will be decreasing, but the value of depreciation will not become zero. That will not be becoming zero, it will be going into some points. But here after 10 years at the 10% we are charging, right? We are 10% charging in the sense 10 by 100. That means evenly we are distributing for 10 years. So at the end of the year the value of machinery value becomes zero, but here machinery value will not be becoming zero actually. So this is what the depreciation of concept of written down value method. So I think of course the entries for depreciation will be same. Now let us go for seeing the illustration number 2. I think the same question is there here. Jain Brothers acquired a machine on 1st July 2018 at a cost of 14 lakh rupees and spent rupees 1 lakh on installation. Any installation which has been incurred for bringing an asset into condition is part of cost. So we are going to add it with this one. So 15 lakhs will be the cost of the asset. I'll write it separately. So this is 15 lakh rupees. Okay, this is the total cost of the asset, and on it, so and it has been purchased on 1st July 2018. So if the books are closing on 31st December every year, so for half year only the depreciation will be charged for 2018, and from next year onwards we are going to charge the amount of depreciation evenly. I think you have understood. Okay, now let us see. Okay, let us see another question. The firm writes of depreciation at 10% year per annum. So but here they did not mention on the original cost, so this is not a straight line method. The books are closed on 31st December every year, so for half year we are going to charge for 2018, and for full year from the next year onwards. Machinery account on diminishing balance method, so only machinery account is asking here. But if possible we are going to see the depreciation method, depreciation account also, but only two entries will be same, the posted entry from machinery account and also transfer it to profit and loss account. That is the two entries which we are going to see here. That's it. So for the year 2018 and 2019 we need to show the machinery accounts. So very simple and easy to calculate. First of all let us calculate let us see for year 1 what is the, for year 1 amount of depreciation cost of the asset is 14 lakhs plus 1 lakhs plus 1 lakh, which is 15 lakhs, and on which depreciation is or we can say depreciation up to 31st December 2018, which is what 15 lakhs into 10% into 6 divided by 12, which is 75,000 rupees. So for year 1 both the answer, both the depreciation are same. So this is depreciation for the year ended up to for the year ended 31st December 2018. What is the balance? 14 lakhs 25,000, right? And what for this is the balance as on 1st January 2019. And for the depreciation up to 31st December 2019 is what on this 14 lakhs 25,000. This is the reducing balance return on value. On this return on value depreciation will be charging. So 14 lakh 25,000 into 10% for 12 months. So into 12 by 12 not required. So for 10% we are going to charge on return on value, which is 1,42,500. Then what would be the balance for that year, or for the balance which has been brought forward for the next year? Will be what? 14 lakhs 25,000 minus 1,42,500. With the help of calculator we can see 14 lakh 25,000 minus 10%, 12 lakh 82,500. So 12 lakh 82,500 is the return on value. Now we have seen the amount of depreciation. So for this year 1 depreciation is this one, for year 2 depreciation is 1,42,500. So let us now prepare machinery account. See, these two are the basic questions and we are not having any purchase or sale of machinery. But in next problems we can see the different problems which includes purchase and sale of machinery also. Now we need to show the machinery account simply. It has been purchased on 1st July 2018 for 15 lakh rupees, that is 1 lakh including with 1 lakh of installation. So to bank account it has been purchased for 15 lakh rupees. In bracket we need to show 14 lakhs plus 1 lakh installation. Okay, this is installation charges also included here, or else we can show the separate account entry to bank for 1 lakh rupees also. But both are same entries, right? So there is no need of showing the different entry. On 31st December 2018 we need to charge the depreciation. So by depreciation account, by depreciation 75,000 and by balance carried on 14 lakhs 25,000, total 15 lakhs. And to balance brought down on 1st January 2019, to balance brought down 14 lakhs 25,000, and on 31st December 2019 again entry will be positive. So by depreciation for 1,42,500 we have seen the amount. And what is the amount balance? By balance carried on 1,42,500. this should be separated this one. So 12,82,500. So 12,82,500 and total of 14 lakhs 25,000. So 14 lakhs 25,000. So 31st, or sorry, so this is 1st January 2020. We need to write to balance brought down, which is 12,82,500. So this is how you need to write the machinery account. And of course the entry of depreciation will be same. In depreciation account we need to debit this same value with 75,000 and that is to be transferred to profit and loss account by profit and loss account in depreciation account credit side. So the same entry will be mentioned for 1,42,500. I think you have understood the return on value method, which is WDV method or DBA method or RBA method, by using balance method. So this is what the second method of depreciation. In the next video we shall see the different methods, or we may see the problems also. So thank you for watching. If you like my videos, please subscribe my channel. Don't forget to hit the bell icon. Thank you for watching. Share the video. Bye.